From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Every year thinks it's special, but 2025 really tried to test the fundamentals. We saw massive swings, everything from gold hitting new highs to major policy shifts like the 2025 tariffs that sent the S&P 500 on a 20% roller coaster ride from peak to trough. So today we're taking a look in the rearview mirror to 2025 and talking about the investment rules that didn't just stay relevant, but were reinforced. Rule number one, no bears live on Park Avenue. It sounds catchy, but it's a reminder that over the last 75 years, there hasn't been a single negative 20-year period in the stock market. Even if you invested at the absolute worst possible moment, history shows you still would have tripled your money over 2 decades. I know it may be hard for some viewers to stay calm when the headlines were screaming about tariffs and trade wars, but that's a great perspective to help remind why you want to stay level-headed in volatile markets. Rule number two, don't let politics impact your portfolio. In 2025, we saw the market drop 10% on tariff announcements, then jumped right back on a tariff pause. If you tried to trade based on the news, you probably got whipped around. The data shows that energy stocks actually performed better under Biden than Trump's first term, which is the opposite of what most headline investors expected. So the lesson here is to ignore the noise, which takes us to rule number three. All-time highs are bullish. When the market is moving, people always talk about all-time highs being scary. It's at the top, it has to go down, right? But momentum is a powerful thing. In 2025, we saw that new highs often led to more new highs. But you don't want to be complacent. You want to make sure you're working with a team that's proactive with your portfolio. On the flip side, there's buying on the dip, which many saw a lot last year. That's where rule number 4 comes in. Don't catch a falling knife. There's a massive difference between buying a diversified portfolio that's temporarily down and trying to save a single company that's crashing. Buying the dip works for the market as a whole, but it can be fatal for individual stocks. And that leads us to the last rule, which is diversification works. When you approach this rule, think of buckets. Bucket number 1 is what you can control, like your savings rate. Bucket number 2 is what you can influence. And bucket number 3, which is the stock market, is totally out of your control. So you won't be able to will it to move, which is why you want to focus on your plan. If 2025 taught us anything, it's that a headline is just noise, but a plan is your lifeline. We saw just how quickly the markets can turn, and you shouldn't be navigating that volatility alone, wondering if your retirement is at risk every time the news breaks. You need a coordinated professional team like ours to stress test your strategy and keep you on track. Reach out today for a no-cost, no-obligation portfolio review. Take control of your financial future by calling or visiting lineweaver.net. Here's Fox News Sunday.